Hi, I'm David Morgan, and welcome to this webinar. I do not expect this to be of much value over the next week to 10 days. That's how emphatic I am about how you have to trade effectively. So for those that are paying attention, pay attention. I want you to understand that trading has a certain mindset, and this webinar is not going to go into that. It's going to be too brief. So pay attention. I'm going to go through a trade for you and give you an idea of what our membership entails and how succinct it is to help you make money and provide, protect, and preserve your wealth. So right now, let's get started. Thank you so much for coming to watch this free webinar. Today I'm going to tell you why this is the buying opportunity. In fact, the best buying opportunity I've seen in the last 2 years. Before we get started, we are here on a landing page. Remember, this is the protect and build wealth under all economic conditions, and that is what we do at the Morgan Report. So if you're not a member of our free list, go ahead and give me your first name and your primary email address. And if you already are, we would appreciate it if you pass this on to friends, family, or acquaintances that are interested in preserving and protecting their wealth. First thing I want to point out is for our subscribers, our subscription service, our members only, I go through videos like this all the time, usually 3, maybe 4 a month on an as required basis. There's no set schedule because the markets move to their own rhythm. But what I did, you can see this blue line, is the uptrend line from the major low in the end of December 2015. And we've touched these bottoms, as you can see. However, we broke that trend a few weeks ago, and I made this video, a video like this for our members only, telling them that we were breaking the 1240 level. Nobody knows how low is my exact words, and I expected to see the 1200 level tested, which we have done. So now I'm in my stock charts account, and I want people to note a couple of things. One, I actually was going long the silver market at $17, breaking through this level if and only if it obeyed the Morgan rule, which it did not. We needed a little more price action, but you can see that we have pretty good volume above average going up. That's the black lines. And then, of course, it didn't meet my requirements, so I didn't enter the market or plan not to enter the market, and yet we had that big sell-off. That sell-off, this red volume line, that speaks volumes. Volume's the most important thing on a price chart. And we broke through the 50-day and the 200-day moving average. Ever since that point in time, you can see from this chart that we have been in a downtrend. We have been in this, what I can call congestion area or an indecision pattern. It's basically a channel formation is how most refer to it, between roughly the 1530 level and the 1560 level. However, we broke that the last few days, as you know, and we've come down rapidly into areas below 15 on this very large volume, which means we're still trying to catch a falling knife. No one can tell you exactly where this will bottom. What I can tell you is look at this chart. We're looking at a 1-year chart, and we're at the lowest point. In fact, if you go back and look at a 3-year chart, we're basically at a level that is almost the lowest it's been since the December low, which did print under 14. This is a buy area. Does that mean you buy everything here and now? And the answer is no. However, what I've taught the Morgan Report from day one is you get a lot of leverage with not much risk in the mining equities. So I'm going to tell you what I gave to my people, the subscribers, our paid members, just a couple days ago, is the highest beta stock, highest liquidity stock that I know of, and I've traded it often in and out profitably. And that is First Majestic, AG, on the New York Stock Exchange. This stock has just put out its fundamental release just about a week and a half ago, and they're doing everything right. They fundamentally are lowering the AISC, all-in sustaining costs. They're well below $10 according to what they put out in public domain. I could argue with that, and I'll reserve that for my paid members because there's one factor that they don't talk about and how they determine the AISC versus how the Morgan Report determines it. But the point is being it is a very low-cost producer and one of the most highly leveraged to silver in the industry. So does history forecast the future? Not necessarily, but I want to point out to everybody that's watching this webinar that I bought right here, right at this low, the end of December 2015, right in this level, around the $3 level. And I bought this stock, First Majestic. And where did I sell? Well, believe it or not, I was lucky enough to pick the top. I don't do it every time, but I did in this particular case. So we made a move from 3. It was actually below that, but I'll use 3. And I'll use 18 as the exit. 6 times on your money through about half the year. It went into, I think, September. You can check. And that is like silver going up 6-fold. So that'd be like silver going from $5 to $30, from 10 to $60. And silver did not do that, but this stock did. And my members were extremely happy. In fact, at that point in time, I thought we would get a pullback to probably this level. And I actually thought that 2017 would be a better year than 2016 as far as overall price performance in the metal. And guess what? I was incorrect. And 2018, of course, has been what we're seeing now. So let's focus on the here and now. Here's a spike low, $5 level. I bought some yesterday about the 540 level. Bought some more today as I'm doing this video this morning before the market closed in the low 5s, very low 5s. And I'm using it as a trading position. Do I have some cash left? Yes. Will I buy more if it drops below 5? Yes. But I'm also prepared for maybe not that big a move, but I am prepared for a move probably up into the 9-ish level in a fairly short time. I mean, look at this chart. We were at 8.5 just not that many trading sessions ago, and now we're at 5. You got to take advantage of these type of moves, and that's what I teach you here at the Morgan Report. So that's your trade. Doesn't mean you have to do it. I certainly don't recommend trading for those that are not adjusted well of themselves and have the kind of mentality that a trader needs to have. 1, you got to, if you're wrong, promptly admit it. 2, always use stop losses. 3, don't overtrade. 4, don't bet more than you should. I mean, there's a lot of factors to trading efficiently that most people cannot and will not properly perform. But I want people to understand what we do here, why we do it, and how we do it. And basically, a lot of what I show in these videos for my paid members is, you might call a bit of coaching, because they know I've been doing this for a number of years. They know I'm successful at it, and they have that little extra idea that, you know what, I see what he's doing, I like what he's doing, I'm going to follow him into this, or just watch for a while. There's nothing wrong with being a paid member and just watching the trades that I perform and seeing if they work out or not. And in that case, now if you want to be extremely conservative and you want to make sure that everything is going to work your way, there's a way to do that. This area right here, I'm going with the cursor, if you can see it, is called a cup formation. There's nothing more powerful in stock analysis or commodity analysis than a cup and handle. So cup is like this, and then the handle is something going horizontal, or what I call an indecision pattern. Once it breaks above the handle, then you go long. And so that would be, in this case, around the $8.50 level. When that happens, your probability is extremely high that the stock or the commodity or whatever you're trading from the long side will perform and continue up that path. However, look at what you'd be giving up. You'd be giving up the opportunity to go from 5 to say 8.5, which again, I think that this stock could do before the end of the year. So I'm going to leave it there. I'll just have a few more words for everybody, and then I'll sign out. So a couple final words here on this free webinar. One is that we are in precarious times. Anyone that's watching this webinar probably is well aware of it. And if you think of it from a fundamental aspect, look, you've got the Turkish lira that's falling rapidly. You basically have a currency crisis unfolding before your eyes, which would portend gold to move up, up, and up, and obviously it is not. Most are blaming the dollar or stating the dollar is higher and higher, which it is, and there's a lot of reasons for that. We go into that kind of depth in the Morgan Report paid subscribers, and this is something that really keeps basically your idea of why and when and how markets move. But I'm just doing this one for free. I want you to understand that you get a lot more when you subscribe. For example, I have a trading position in First Majestic and a core position. And the reason I have a core position is I like to invest for the big benefits of owning a stock that goes from that level. Let's say it's $5 all the way to 50 or maybe 100. And that sounds really crazy at this point in time. But believe me, once this market catches fire again, and I think it will over the next few years, I'm looking for a peak overall in the 2020 to 2022 timeframe, which is a short 2.5 to 4 years from now. And I think people that get started now are going to be the ones that actually have the best gains ahead. So I'm going to sign off. I want you to sign up for our free service at themorganreport.com. Thank you for your attention.